Happy Veterans Day, everybody. How's everyone doing? Hi, Matt. We start at the top of the hour. Hello, Stuart. Brock, I'm not sure what you're talking about. Head fake lesson. Anyway, the only position I went home with over the weekend was short Swiss. I was stubborn about believing there was another wave to the downside in the dollar. Might be a little bit premature to predict it's happening, but we got through this 98.30 level. But this action's pretty convincing. Swiss, here's your daily. 2-day off number is 9949. So we're under that. I'm looking for sharply lower levels. If I'm right about the Dixie, here I'll have to show you the weekly on the Swiss, where I think it's headed towards this red line down here, which is going to take it. Looks like about 5.5. If this plays out the way I think it would be. A little disappointed crude is lower. Wanted to short it higher along with the S&Ps. But crude on the 4 hours still looks like it has a chance. I'd like to see it up around the 61.8 level, 58.5. S&P started off lower on the week. I don't know if I could call it a top, but it is interesting how NASDAQ is respecting on both sides this lime line here, which is a wedge line. And we had a little bit of a throwover last week, and then from last night's session, it's respecting it. Everyone see this lime green line? I'll use a different color next time for important lines like this. Everyone see it? Hi, Monica, Galaxy, Nigel. So I'm not sure what you were talking about, but if you learned something, hi Matt. Matt's going to be with us at Panama Orange today. He's been very bullish silver for a long time. So Brock, I'm not exactly sure what you're talking about. Just taking a look at a few other things. Of course, cable's a star. Great advice by Grega that if you didn't want to mess with the euro or the pound, that the Swiss could have been your short. The yen coming off, and that's why we're getting a pop in metals. And we have reached pretty close to initial targets in yields. We got up to, I think, 198. What was this high here? Friday. 197, which was enough to take out this high. But I don't think we're done yet, which implies I don't know if I'd get aggressive about shorting the yen. It has a little different look when you look at the 1 hour. Maybe it was a 15-minute. A little different look than Swiss. Swiss looks weaker to me. So for dollar pairs, if you want to be short the dollar, I prefer the Swiss over the yen. Maybe the yen has another chance. Add up for a 3 up here. And if that's the case, gold will head lower and there'll be another opportunity to short S&Ps. I was looking for about 3110 this week. And let's see, was there anything else I really wanted to cover? And if you guys did anything in TLT when I was talking about that I thought yields would head higher, we're very close to achieving targets. So when I was talking about it up here, I was talking about maybe 132. So, it's not going to happen today with the yen weaker, but maybe in here 132. I actually think this is going to be a big buying opportunity and that we're going to make new highs in TLT, which means this is a correction in yields, at least for this, because after this does complete here in the 10-year, whether it's here or I had counts all the way up to potentially this confluence around 220, 230. Then I'm looking for, this is, everyone see my cursor here? Give me a Y if you can. Oh, okay. This historic low, which the 30-year had cleaned out. So see, this was the historic low in the 30-year, and we cleaned out the low before this rally. So I'm thinking that this, kind of looks like ABC. Not sure where it's going to finish, but that there's another wave down in yields to take out this 134 low in the 10-year. Okay, so and I thought this was going to be commensurate with risk off in the S&Ps. One economic weakness, whatever the reason is. We had a few things to look out for this week. You have the public impeachment hearings in Congress, and I believe on the 14th is whether or not we're going to open up another front in the trade war with EU. I kind of believe it's going to happen. So we'll see. And all I could say is who's ready to have a great week? How about you, Dark Star? And why not be a shining star instead of a dark star? Do you have to be dark? Huh, man? I know we all have a dark side to us. Okay. That's a good one, man. All right, so you have a you have a good attitude. It's only a skin color. All right. All right. Well, thanks for brightening brightening up my morning. How you doing, Blake? How was your weekend, buddy? And I want to thank you for your service. I never had the guts to join the military when I was of age. I was happy to have a very high lottery number in the dorm and just, spend time instead of with machine guns with my bong. All right, buddy. So,
Good morning.
thank God for people like you. That's all I can
It
say.
was. I don't know if it was guts. It's more stupidity. I
Okay.
think at the time,
A
wasn't
lot of guys
necessarily.
say that. Yeah. You're
Yeah.
glad you did it though. So sometimes we do stupid things that work out for us.
Did I ever tell you this? I should tell you since it's Veterans Day. It's a little slow out
Yeah.
there. We're getting a little push higher in the euro, a little push lower in the dollar now. I'll let Stelios talk about Brexit here in a few
Okay.
minutes, but because there's actually something to say today. But I should tell you this story. So when I was 17, um, we knew we were going into Iraq at that point.
Right.
It was 1989, and I was 17 years old, and my buddies and I were like, we were thinking we were all like C students, like, okay, we're gonna go to community college for a couple of years, and we'll go into ASU, that type of thing. That was the plan.
Okay.
We were like, well, we're going to war. We're going to war, so let's
Join.
uh, let's join. And they're like, yeah, we're just not gonna just join the military. We're gonna join the Marine Corps, because if we're gonna be, if we're gonna be we're gonna be in the military, we're gonna be like the baddest mofos on the planet. Let's actually do this thing. Let's do this like we mean it.
Cool.
And I was like, all right, it sounds good. Parents didn't want us to go. We're like, yeah, this is me to the far
Yeah.
right here in Somalia, by the way, right here.
Wow.
And and so we all go to the recruiter's office. Me and my two buddies, right?
Yeah.
Matter of fact, one of them just moved to Texas last week, and I hung out with both of them a couple times last week, actually. So we go in the recruiter's office. We all like, we're okay. We want to join. We all selected our MOS, which is our specialty, our military specialty. And I'm like, we're gonna go fight a war, right? We're gonna go fight. So I'm like, I'm gonna go in the infantry, of course, because that's what we're gonna do. If you're gonna fight in the infantry. And my recruiter is like, "Are you sure you really want to do this?" I'm like, "Yeah, I'm gonna go in the infantry. We're gonna go fight." So we get out of the recruiter's office. I'm like, we all join. We're like, yeah, hoorah, blah blah blah. We're teenage kids. I'm like, yeah. So we're all gonna be grunts together. They're like, no, we're not. My buddy's like, Yeah, I'm gonna drive tanks. And my other buddy's like, yeah, I'm gonna work in aircraft ordnance. What are you gonna do? And I'm like, I'm going in the infantry. You idiots. That's what we decide we're gonna go fight. What are you gonna do fighting on driving tanks and the other, you're gonna go like do aircraft ordnance?
Yeah.
And yeah, so I'm the stupid one that went the infantry. And that's me right there in Somalia, back in 92, 90, Christmas of 92, right around there,
Wow.
December 92. Yeah, anyway, so funny thing is we always joke about it, how,
Yeah.
you know,
You all went joined together and ended up being separated then.
no, funny part is I spent a lot of time with my buddies in different places. So my buddy
Cool.
that was in aircraft ordnance, he actually ended up being a navigator, which is a celestial navigator before, we had uh, radar and,
Yeah.
GPS. He'd have to do celestial navigation with,
The stars.
the stars. Yeah,
Wow.
exactly. And and Marine Corps is the only branch of service, and I think probably still is, that has enlisted navigators. He's an extremely intelligent guy, except his lack of intelligence showed when he left here and moved to Texas.
Oh,
Just
yeah.
kidding.
Yeah.
But no, he did it for his wife. But anyway, he flew to Guam one time when I was in Guam, and we hung out there. And I used to go hang out with him and his wife. They'd live in El Toro, which is north of Camp Pendleton, back in Orange. And then my other buddy that was a track driver, I met him in Africa because he happened to be there at the same time. And then we spent my 21st birthday together in Okinawa, Japan, because he was there on MP duty, which was it was fun. So and plus I'd see him. He was in 29 Palms. I was in Camp Pendleton, so I'd see him. For like a year, I saw him like a couple, like probably every other month.
So, you know what it sounds like to me, the way you talk about it, like they're fond memories, is that what you thought was stupid, you're glad you did.
Well, I didn't. I'm alive, so that's good.
Well, no, you had some
You know,
pretty cool experiences too, you
Definite
know?
definitely cool experiences. They're the places that I went are not places that you'd wanna go vacation necessarily, but they're places that not a
Yeah.
lot of people have gone to. So, um, doing
Yeah,
what
I
I
mean,
did,
I don't think Club Med has a spot in Somalia.
No, and
Yeah.
I got to go to, like, the jungles of Indonesia outside of Kuala Lumpur. I got to spend time in Japan, and got to spend time in, I was in sunny California. I was in Guam for a year. It was cool. I got to go to some places. It was good, especially as a young, 18 to 22-year-old kid. I got to see a lot of places, and I obviously grew up a lot.
Yeah.
But anyway, for the happy Veterans Day for those of you that have served. It was, I look back and I always, people say, "Hey, thanks for your service." I always say, "Well, it was my pleasure." But I'll tell you, at the time, it wasn't my pleasure. I hated well, most of it at the time. Probably because I was in the jungle a lot of the time, or out in the field, we'd call it. You spend a lot of time out there. Anyway, we're getting a little lift in the cable today, and I'll have Stelios talk a little bit about that. But one thing I want to point out regarding the cable is pullback has been pretty minor. We came back right into, my charts haven't changed at all. We're right into the support zone, and we came to 129 and a half. If you guys don't remember last week talking about that 129 and a half level, let me just go ahead and refresh your memory. If you take this low right here, you take this high right here, it was 127% extension right there. Well, actually, it was right here of this move, this last move higher. 127% extension came in at 127.59 or something like that. And we came within striking distance of that on Friday. We bounced. Obviously it's news related this morning, but the euro, excuse me, the euro's getting a little bit of a lift as a result because of the cable, firming up, and the euro's coming out of this little descending wedge. I think we'll find some resistance at 110.60, which is the 110.60, 110.70, somewhere around here. Up here, right here. I think I talked about this descending wedge on the on the week ahead video. But I was hoping for a move down to 109, 109.70, 109.90, somewhere in this neighborhood. This is where I was really looking to buy the euro. But just because I want to buy something there doesn't mean it's going to necessarily get there. And I want to buy things and sell things at all sorts of prices throughout the course of the day, the week. I always know where I want to be a buyer or seller. Doesn't mean that the market's ever going to reach for the levels that I hope. And in this case, is one of those situations where I really wanted to be a buyer in the euro down here, and I talked about that on the week ahead video that I'd be a willing buyer down here. We just haven't reached it, and we may reach it. I mean, we could do this and then do this, before actually, I can get a nice position to be long, or a nice place to be long. I am short the euro Norwegian krona, so it's basically a proxy for the euro dollar, and I'm short it because I think that we have made a significant high in the U.S. dollar Norwegian krona. There's a big, and if you look at it this way, let me grab my drawing tool here. Let me just give me a second. Annotate, draw. You could arguably say that we're developing some sort of head and shoulder pattern. So I don't think that this is necessarily the high. We might be able to get another move up towards 920 before eventually rolling over, and that would be equivalent of the euro dollar dipping to below 110. And I think this eventually is going to give way. Like I said, I think the U.S. dollar Norwegian krona is primed to actually roll over, and it's something that I'm looking to, I'm trading and I'm short. I'm actually looking to add to it. So um that's what I'm doing with that. Now the Aussie and the Kiwi both trading relatively heavy. The Kiwi is actually trading a little bit better this morning. Remember, we do have the RBNZ this week. Everybody is expecting the RBNZ to cut and expecting them to be dovish. So when everybody's expecting them to cut, everybody's expecting them to be dovish. That's probably now the risk becomes more some upside risk in the Kiwi, because you've got people that expecting the worst, and the risk is that they cut, and they're not as dovish as you think. I know previously, the last 6 months they've talked a little bit about toying with negative rates, and they kind of took that back a little bit. But the Kiwi, in my opinion, could really firm up, especially with the China-U.S. trade deal. Also, keeping that in mind, with the China-U.S. trade deal, we were discussing this in the office in Greenwich today. You know, Donald Trump doesn't have very many options here, and he's probably going to just take whatever's on the table. I don't know if he's really going to fight it much more, because he is getting into that home stretch into the election cycle where he needs to really start shining, and from a public standpoint point of view, and to ink some sort of China US trade deal. May not be the best deal in the world, but I think that he is probably going to try to put something together, because he wants to look better in the public eye. He's got a lot of um, uh, stuff hanging above his presidency right now that I think he's going to want people to overlook, and so therefore, I think he's probably willing to negotiate more, based on that. And so the reason why I mentioned that is because when you're talking about the Aussie or the Kiwi, these currencies could really strengthen, in light of some sort of China U.S. trade deal, if it gets done. Now, one of the other things that I want to bring up really quick, and then I'm gonna bring in Steve and Stelios here in just a second, is the dollar yen. The dollar yen is obviously threatening a big. This is a big inverted head and shoulder pattern. You guys notice the symmetry here, right? This is a very symmetrical. Let me grab the. Okay, it's very symmetrical at this point in time. The reason why I bring this to your attention is because we're probably, and we could be within just a couple of days of inking some sort of U.S.-China trade deal. And if that's the case, and we do end up breaking out above, clearing the 200-day moving average, really breaking on like 109.50, the risk could be a very symmetrical move, and that's just going to add fuel to the fire on an upside move in the dollar yen if it happens. So just keep that in mind. I don't have any yen exposure right now. I do not. Um, would I mind putting some yen exposure on? Under the right circumstances, I wouldn't mind doing it. I know, stocks, they continue to look really strong here. Yes, they're down a little bit today as we hit this big confluence of fib levels. There's a big 161% extension of this move, 127% extension of this move, and we are, knocking our head right up against that. But what happens if you break above it? That could really open up some further upside. I think people have been trying to fade this move um, uh, uh, quite a bit, but the market continues to climb you guys have heard it before, the wall of worry. And as we can continue to climb the wall of worry, it just continues to mow over people. I know it's very tempting to just be short equities, and look, I've shorted the S&P multiple times throughout this like last year here, sometimes successfully, sometimes unsuccessfully, but I know it's very tempting. But like I said, there's a lot of things that are potentially positive, equity market positive, that could come to light. China US trade negotiation earnings aren't that bad. You have a Brexit deal that could happen. And the equity markets, yeah, they're pulling back a little bit this morning, but is it really the right time to be bearish? I think a move back below 30.20, this big previous resistance, that would seal the deal, but that maybe the top is in. Maybe it'd be one of those things that I could trade against, knowing that we reverse this bullish breakout. But we're pretty far away from that right now. We're a good 50 S&P points away from that. So I, good, 40, 50 S&P points. And it's like, I'm not really too comfortable with that. As we break out here again, this is where I look at those yen pairs. I look at the dollar yen and euro yen and pound yen, and think to myself, can I trade those to the upside if they do break out? The answer to that question to me is yeah, sure. So anyway, just a few things that I wanted to point out. I wanted to bring in Steve and Stelios. And Stelios, good morning. Steve, good morning. Steve, you also served in your
we all
military. Oh, Stelios, you did too?
Yes, we all do.
But I was in the Armored Corps. He was in some kind of school somewhere, weren't you?
I was at the Air Force.
So he did nothing basically.
At a little unit within another unit that was responsible for the printing material of the Air Force. So go figure.
He found a way to be in the service and not have to pick up a gun.
Yeah,
he's a peaceful guy.
Oh, no, you don't understand. Nobody picks a gun.
You guys have those fearsome Turks right over across the border. Careful of,
Yeah, the Ottoman Empire is an old man, dying man. They're still there, that Erdogan guy.
Yes.
Oh boy.
So how you guys doing? Do you guys have a good weekend? I saw a picture circulating of you guys all dressed up this weekend. Was it this weekend?
That was last night. We met up with Mark Yusko.
Yeah, let me show you.
You met up with Mark Yusko.
Yeah, he was here for he was a speaker in some event, and we met up with him for a drink.
There you go.
Oh, very cool. I had no idea. Yeah. So didn't Dale have him on as a guest one time?
Yeah, twice actually. Yeah.
Three times, I think.
Yeah. Oh, great.
I'm glad to expand everyone's network.
Yep.
Yeah, this is Stelios, by the way.
Yeah.
This is me, and this is Mark, for those that don't know.
How many
Awesome.
Bitcoins did he have on him?
Did
Did he pay for the drinks with Bitcoin?
Actually, we did have like an interesting discussion on cryptos and
Did he convert you?
among other things. He's a very interesting guy, by the way.
Are you a Bitcoin conversion?
Yeah. Were you converted?
Yeah, everything. I just sold everything today and buying Bitcoin.
So you were
That's a conversion.
So you were literally looking at him and going, "I believe nothing you say." Right now. That's what you were.
No.
We weren't like that, but we we had a discussion, which was good. And he's actually himself, even though he's really into Bitcoin and cryptos, he was very flexible, let's say, and we discussed a lot of stuff. So he was very nice, really interesting guy.
Very cool. Well, hey, before you go into the charts and everything that's going on, what's happening in the UK? There's some big news this morning, right?
Yes. Well, we know that the elections are coming in about a month, and we've already started to have the first strategic movements, let's say. So today's move is all about Nigel Farage of the Brexit Party, who said that basically said that the Brexit Party will not stand or not contest the seats that the Conservatives won in 2017. So this is 317 seats, and this is in order to he wants to he warned of a risk of a second referendum if the Remain parties win, and that kind of makes sense, right? If the Lib Dems and the Labour got a majority win, then both these parties are quite evidently pro-Remain. So there is a chance of a second referendum, and he said we want to avoid that at all costs. Putting country before party, blah blah blah, and he wants to make sure, he essentially wants to make sure the Conservatives are the largest party if there is if there's a new government that gets formed. So this is what's happening, and basically, what does this do? This reduces the percentage that the Brexit Party will get and increases the Conservatives. So this gives more power to Boris Johnson to potentially pass what he wants to pass in Parliament. So
interesting.
Yeah, it's.
So it's definitely a pound positive. I mean, obviously the pound rallied. We stalled at the 618 retracement that if you were in the chat room, Amanda pointed out at the 128.95 level. The cable stopped at the 618, but overall, I mean, this is a pretty good development if you're bullish the cable.
Yeah, Blake plus Steve and Grega warned people not to bottom pick euro pound last week, that it was a little triangle, and it's making new lows now. So I hope people took that seriously.
It's breaking down. Yes.
Good call, Steve. Nice little triangle on that, and Grega confirmed it. So once Grega confirmed it, I agreed with you.
Awesome.
Thanks for the vote of confidence.
The interesting thing actually was that even before that happened, we had some pretty important data out of the UK. So we had GDP, which came in at 0.3% versus 0.4% expected. The UK avoided recession because remember last quarter was minus 0.2%. Manufacturing production, trade balance, industrial production, everything came in negative. It was a sea of red, and sterling didn't move.
Yeah, I didn't care about it.
A few ticks. So that shows you that the path of least resistance is still higher for sterling. At least it looks that way. And then of course, we had Farage's comments, and then it just flew.
Yeah, it's all about the Brexit developments. I mean, a little bit worse, a little bit better economic data won't make a difference as long as things are moving in the direction of some type of a resolution. I think indeed that the pound will remain very well bid.
Right. Okay. Well, guys, I want to say once again, Happy Veterans Day to everybody that has served. Thank you all for your service. For those of you that have, we celebrate it here in the United States, but I look at it more as a global, celebration, because if you served in your country's military, you obviously fought for freedom. So, congratulations to all of you, and thank you all for your service. So I'm going to let you to it and let you get to the charts. You guys have a wonderful Monday. It's probably going to be fairly slow, I think. But we'll look forward to seeing you tomorrow morning on the morning, or on the, I almost said the
On the
morning
morning edge.
on the phase webinar. Sorry, I'm tired. It's Monday. By the way, I went to a place called Medieval Times yesterday, and I've never done that before. And it is the cheesiest jousting extravagant.
Yeah,
But
the
there's
pictures
one
were
in Anaheim.
amazing.
No,
Yeah, the
they're
pictures were
really
amazing.
it's pretty cool. It's quite a thing. You get to eat with your hands, and it's interesting. Kids loved it. It's one of those. I'm glad I did it. I conquered it, and I'll never do it again.
Okay, Sir Blake ahead.
Yep. All right, guys. Have a great one.
All right.
Thanks,
Good
Blake.
hunting, Blake. Steve's.
Hey, Dale.
Another week. Here we are.
Yes.
Here we are indeed. By the way, let me, since Blake mentioned it, let me show you a picture of where he was.
I want to go there.
Yeah.
People wearing crowns as well in the
Yeah.
in the audience.
Oh, could I be your surf?
Nice.
Right.
Okay,
Yeah.
so we talk about the UK. What else is there? I mean, very, very quiet morning. The only other thing of interest is we had CPI out of Norway, came in at 1.8%, which was as expected and up from 1.5% from last reading. Very boring. We have GDP out of Norway tomorrow, but really, really quiet. Steve, sorry, have nothing to say.
Oh, yeah.
Steve, I'd like you to open up by telling us what would tell you and confirm to you that the dollar has entered another wave to the downside.
Oh, yeah, that's actually quite
I know
simple.
the pound's leading it and euro's lagging seriously, but I'm wondering Dixie-wise what it would take.
As we've said before, the most important area here is this channel's support.
Oh, okay.
So if
I
you
can't
really
wait that long.
I know what you mean. I know what you mean. It's not easy. I still have a bearish bias. I mean, within as long as we're within this channel, but the path of least resistance, from a technical perspective, is higher as long as we remain in this channel. Personally,
How about getting back under that blue line that you had a horizontal line? Where's that? 98.13.
Yeah, that's definitely going to be, it's 98 roughly. So,
Okay.
below 98 is going to be, a good start because we will have failed to complete this ranges target, which would, take us up to 98.90 or something like that.
Yeah, it'd be 61.8 up there or something.
Yeah, so, I really want to see.
Buddy.
Yeah, I really want to see, a breakdown from that, because if that happens, then I think, we're going to have a lot more downside to talk about. There's no question about it. Now, you mentioned the yields, and since, of course, the yields are, absolutely connected with, what the dollar is doing. Of course, not in isolation, but, I'm also monitoring this ascending channel here in the 10-year yield. You can see it here. I mean, we're not far away from resistance. So I want to see if we're going to find resistance in this channel trend line resistance, or if we're going to get some type of an overshot and accelerate higher, because that's going to be a totally different story to talk about then. But so far, this recovery in the yields seems to be very orderly and very corrected.
Like an ABC, maybe.
Yeah. So as long as we stay below that, like 201, area, I think the yields are in danger of, rolling over and moving lower once again. So yeah, but I mean, what we should focus on today is what's happening here with the pound. Not just because we had, some obviously positive news, as Stelios explained. In essence, Nigel Farage's comments increase the chances that the Tories are going to get a majority, and hence have a higher chance of passing through the plan about Brexit. But from a technical perspective, we were anyhow viewing this move lower as corrective. Initially, we said this might be a triangle. But as you know, there is always the second alternative interpretation that this could be a flag. And as it seems, the flag idea, is playing out because we did find support there. And, we're seeing a very nice reaction higher, Monday opening higher. But it's not only what the cable is doing here, which looks like, it's very likely in breaking higher and continuing towards 133, but it is, let me see, who is the noisy one in the company? Okay, Blake, that was his office, I muted him. But it's also what is happening with the rest of the pairs. So let's have a look. I wrote that in the chat room earlier. Let's have a look. Let me bring on the 4-hour charts here. Okay, so let's have a look what is happening with the pound Aussie. There it is. A very nice break higher in what was clearly a corrective move lower, right? I mean, this is a textbook type of correction. Very overlapping, very slow price action. Just compare the amount of time it took, and of course the momentum to go from like 180, 181 to 191, and just look how much time it took for us to retrace whatever it is, like 50% people, whatever it ended up being. And now we seem to be accelerating higher once again, so confirming that this move was, in the direction of the trend, and this move was, a corrective move. So I think this is a very nice breakout that we're seeing here, and it looks very, very likely that we're gonna continue in that direction. Pound Kiwi is left a little bit behind. It's about to make the move now, but as you see, it's also, almost there. So Pound Kiwi showing the same type of a move. I mean, breaking out from a triangle price action here, very corrective. Just once again, compare this move higher with the type of move we had following that. Just also look at the RSI during this move. The RSI kept oscillating, around 50, which is, neutral. So pound Aussie, pound Kiwi, and I'm assuming, of course, that we also want to have a look at what's happening with pound CAD. I haven't done in some time. There it is. Pound CAD also higher. Be careful of this channel though, and some RSI divergence here. So obviously, as it seems, pound against the CAD is not, the best place to be at the moment. I mean, more choppy price action. So that's what I think about the pound pairs. The vast majority of them look quite healthy. Now, having to do with the indices, we warned on Friday as well. Sentiment is quite overdone in the short term. The fear grid index, I think, hit 91 or something, while at the same time you can see that the S&P, is very, very close to that confluence of resistances we had. The Nasdaq is exactly at resistance, on the confluence of resistances. You can see it here. The Russell, same deal. If you remember, we've talked multiple times about the importance of this range. You can see, I mean, this is an important range. It's been in play since the very beginning of the year, right? So we've been trapped here for like 11 months between 160 and 145, and we're once again testing 160. So at least 3 of the indices are at or almost at important confluence of resistances. At the same time, add to the mix the Nikkei, which found resistance Thursday and Friday. Today seems to be moving lower from this channel. so, just by looking at that, I'm not advocating that, this is it. I mean, we're going to be rolling over and starting the bear market from here. But at the very least, it looks like a very likely scenario that at least a short-term pullback might start unfolding from current levels. So let me see. Thoughts on Aussie USD and on USD yen? Yeah, absolutely. We can have a look at both of them. Nothing has really changed since last week from the Aussie perspective, and the Kiwi, same deal. If you remember, we kept saying that the Aussie is finding it hard to crack through the 61.8% fib here. And even if it did so, a few pips above, we had and we still have the confluence of this descending channel trendline resistance and the 200 daily moving average, which is exactly on top of that. And as you see, day by day, they're also converging to the 61.8. So, within a couple of days, these three are going to be at exactly the same level. So it's going to be a triple confluence of resistances at 69.25. So the things here are very, very, very simple. This is the bull bear line, as simple as that. Below 69.25, the path of least resistance remains lower. Above 69.25, we have a big technical event, and I think we can start seeing a squeeze higher. So, since we are still below 69.25 and not far away from it, the risk-reward ratio would favor short positions from here, right? Above 69.25, I wouldn't want to be short in any, type or form. Okay, as simple as that. Same deal with the Kiwi. We talked the other week, and I actually had this as the chart of the day when we were testing the neckline of this inverted head and shoulders formation, saying that this is this is the moment of truth for the Kiwi, because if it breaks above 64.25, then we trigger an inverted head and shoulders formation, and we're headed much higher. If it gets rejected, we still have to maintain a bearish bias. So, we got rejected. Now, does this mean that the bullish scenario is dead? No, absolutely not. There is still a chance for the Kiwi to move up again. We haven't lost symmetry, as you see, from the left shoulder to the right shoulder. So there's still a chance. I mean, if the Kiwi catches a bid here and retests 64.25 and this time it breaks above it, then it's still a very nice and valid inverted head and shoulders formation. But you don't want to see Kiwi go much lower from here, because then I think it's going to be quite obvious that this was not an inverted head and shoulders formation. It was more of a consolidation, a bearish consolidation before another
And
move
you would
lower.
have to change the smile on that face to a frown. that lower self-portrait of yourself smiling. Okay, buddy, don't forget, if we break down, you have to erase that, okay?
Yeah, speaking of a breakdown, Dale, I mean, if somebody wants to see it from a technical perspective and say, okay,
I've had nervous breakdowns. All right, go ahead.
Okay, I mean, you can monitor this ascending trend line support. So, above it, there is still an active possibility, to actually get that inverted head and shoulders formation playing out. One thing is for sure, as I said, for the Aussie, the same exact deal applies for the Kiwi. Of course, different level, but same deal. Above 64.25, I think this market is going to squeeze. Just keep in mind that this inverted head and shoulders formation's target points to a move towards 66.50. So we're talking about like 225 pips of upside. So, you don't want to be short if we break above this confluence of resistances, because it is a confluence. The horizontal support resistance area, you can go back and see why. It is the 38.2% fib of this move lower, plus, as we already said multiple times, the neckline of this potential head and shoulders formation. So, things are quite simple, and it is exactly as I described. 64.25, the line in the sand. You want to be bearish, you can be below it, but don't be above it. Now, another interesting development that has to do with the Aussie and the Kiwi is the rejection we got from the Aussie Kiwi. And the reason why this was interesting is because this rejection didn't come from a random level, but you can see this purple ascending channel. We did break above this pennant. We did post a higher high, but this channel, did the work once again. Quite a nice. We stalled there for 2 days, Thursday and Friday, and today's price action seems to be confirming that this was more than just a breather before breaching through, because today's candle is quite a bearish one. So I have to say that from a risk reward perspective, the Aussie Kiwi does look appealing as a short against that high. Okay.
So that would make the Kiwi the preferred long.
If that's the case, and as long as we hold that channel, yes,
Right.
the Kiwi
Okay.
might from this point on overperform. Yes, that is the case. Now, having to do with the Aussie against the yen and the Kiwi against the yen, we haven't had any real developments. I mean, the rebound higher in both cases still easily looks corrective in nature. So, I wouldn't be I wouldn't be jumping the gun there in any way. And since one of the questions that we had is, what's happening with the USD yen, besides repeating what I've said multiple times here, and, I don't regret it for a second, staying on the sidelines, I mean, having to do with what the USD yen has been doing, I have to tell you that I see that a lot of people have started strongly believing that the USD yen is about to explode higher. And that might as well prove to be the case. But in order for me to be on board and, believe more in it, I would want to see a daily close above that 61.8% fib, which is also the neckline of this inverted head and shoulders formation. And in order for us not to lose symmetry, I would also want to see that happening quite soon. Because as long as it doesn't, there is still the possibility that we're going to see lower prices from here. So, not by accident, but another proxy, not always, not as frequently as it used to be, but, on occasion proxy of risk seems to be on a key level, and it has to make a decision about, what it's going to do from here. Let me see. Questions. Somebody's mentioning that the VIX is 10% higher on the day, which is correct. That's not really important because VIX being up or down 10% on the day is not anything big, but it is worth mentioning once again that we do have this long-term divergence in the VIX, higher highs in all the US indices. The VIX keeps on producing higher lows on the other hand. And look at this. On Friday, we briefly closed below this trend line only to gap higher today. So, this trend line is still doing a great job in supporting VIX. So, from a risk reward perspective here, also in the VIX against this trend line, being long in the short term looks like a very decent proposition. Yeah. Oh, yeah. Before I check more questions, let me not forget, if you remember, I warned quite early that palladium was likely on the verge of, a corrective move lower. And voila, there we go. Friday was the day. We broke below this channel and we're now correcting lower. Now, keep in mind, we've had like a, huge move lower, higher. So, I wouldn't be surprised if, we have some highs here in the 50 DMA at like 1690. So that might be a possible area of support. But I wouldn't be surprised even if we went all the way down and retested the breakout area at 1610. I mean, that wouldn't be unlikely at all. So nice start of a correction here. Might have more to run. Okay, but keep in mind that we need to see a lot more for a change in trend, because the trend clearly, and undoubtedly, I mean, you can see it here, remains higher, right? I mean, we've been in a textbook uptrend since the beginning of 2016. Another example of what we've said about seasonality, right? Look at this. I mean, I've mentioned in this show this multiple times. When did we find the low? First days of January 2016, and we never looked back. Look at that. When did we find the high? At the first days of 2018, which actually produced like an 8-month corrective move lower. So as you see, seasonality on occasion, plays an important role. I mean, it is a very increased probability to find important highs and lows at the beginning of a year, or at the very end of a year. It doesn't mean that it's always going to happen, but it means that the statistical probability is higher than it would be in any other occasion. Okay. Gold and silver, yeah, absolutely. And copper. I'm going to add copper to the mix, because copper got rejected from this confluence of resistances there. If you remember, we had a look at it last week. I said that this is a key juncture. 200 daily moving average, 50% fib, horizontal support resistance area. Guess what? So far, we're getting rejected from there. Okay. We still remain above this wedge. So, we might see like a pullback, and we might see another attempt to attack that area, but definitely that area proved its importance. Now, having to do with gold and silver, so far finding support in this confluence of supports here at 1660, 1670, and gold has already made an incrementally new low, testing again more or less the 61.8 of that move higher. I wouldn't be surprised, and I wouldn't mind at all seeing another push to the downside towards like 1440, 1430. But I think that eventually, sooner rather than later, these moves, both in gold and silver, are going to be great buying opportunities, and as simple as that. It's worth mentioning once again crude as well, because guess what? Another day that we get rejected from the same vicinity, from the same area. As you see, there is clearly a huge resistance here in the market. 200 DMA, 50% fib, horizontal resistance area. I mean, the market finds it very, very hard to break through that 57.20, 57.50 area. And as long as it does, there is a big chance that, the bulls are going to give up, and crude is going to dump lower towards 50.5 once again. So, that's something to notice. Question about Bitcoin. Okay, we haven't had one in quite some time. Listen, now having to do with Bitcoin. Bitcoin broke through that triangle, and that was definitely a very bearish development. But now we've we found support here. You see, a confluence of supports, 61.8 horizontal support area. We shot higher, but look at this. We are finding resistance once again in the extension, the trend line extension of that triangle. I have to admit that so far this move lower looks corrective. So I wouldn't be surprised if this is, although it's getting longer than you would expect. I mean, you usually, if this is a flag, you don't want a flag to be like more than 50% of the pole. But for me, the key area to watch is this trend line. So above this trend line, if we break above it, I do think that Bitcoin is going to make another move higher. Below it, I think that it makes sense to look lower, perhaps even for another test of 7,230. Okay, so For me, it's all about that trend line. Now, having to do with Ethereum, although you didn't ask, but it's something I'm also monitoring. This was a nice potential wedge, and we had like a big day higher breaking out of it, which made me think that that's a nice buying opportunity, and it might as well still be. But look at this. I mean, once we did break above it, we just flatline. I mean, it's been now what, like 3 weeks?
All the cryptos look like they have like 2 hours of action and then become
dead.
dormant again.
Yeah, dormant, indeed.
Yeah.
Indeed.
Anyway, Ethereum, every time people talk about Ethereum, it reminds me of this is the age of Ethereum. Oh, no, that's Aquarius. The age of Ethereum, age of Ethereum. Only it was Aquarius.
And we also have a question about the XRP. So having to do with the XRP coach, there's only one thing I have to say about it. If you zoom out in the XRP.
What is it, Ripple? Drink it, don't buy it.
I mean,
is that what you're saying?
Just look at this.
Yeah.
I mean, in the grand scheme of things, this, more than any other cryptocurrency, looks like the epitome of a bubble bursting and then dying. So, I mean, I really don't see anything from a technical perspective that would make me want to buy it. I mean, there is some support here. This horizontal support area has played a role multiple times. So yeah, from that perspective, purely from a risk reward perspective, yeah, you can attempt buying it against this low. But in all honesty, I mean, this looks like,
well, it's like buying an option without an expiration date. How about that? You paid 27 cents knowing you could lose it all.
Yeah.
But if it turns up, why can't we see, 40 again?
Yeah.
You know what I mean?
Yeah, but that's basically the only argument you can make about it. And
well,
nothing
that's
else,
why I said it. That's it.
Yeah. So if that
like
argument
is option.
If that argument is enough for you, Stuart, go ahead and do it. Otherwise, I don't have anything else positive to say about that chart.
Well, now, something positive you could say is that sometimes, before silver turned good, and I know you have more of a positive bias on the metals than on crypto, but we had a very, very dormant long-term saucer bottom before it turned good. That old expression that markets bottom in silence and top with violence.
With violence, yes.
Yeah, so you actually do have a lot of silence here. I can't even hear Ripple calling me to open the bottle, which you're from Greece, Steve, but Ripple is a very cheap wine that mainly the guys on Skid Row would drink to keep them warm. So anyway, I don't know why they chose Ripple, because that's what it means to me. It's a cheap wine, but sometimes you drink a cheap wine, you get the same effect.
Oh, that's the only
with a headache. With a headache, though.
It does have alcohol.
Yeah.
So having to do with the DAX, because we also had a question about the DAX. I was monitoring this ascending channel. I mean, we've clearly seen a nice move higher, and we've clearly had a technical event here, breaking above this symmetrical triangle. You can see it here in purple. But obviously, the fact that we tested and even overthrew this ascending channel was, enough evidence that in the short term we're overdone. So, you have two options here. Option number one, for the braver, short it for a corrective move lower. Option number two, wait to buy it at a better price. Now, buying it up here, being, quite overbought on the RSI, we reached 77, being overbought, just by looking at it, having overthrown the ascending channel. I mean, it makes no sense, right? No sense whatsoever. So you either buy it lower or you short it against the highs, trying to make, a few handles. I mean, it can easily retest, I'm assuming, like 12,850, right? So if that's the kind of game you want to play, I mean, it looks appealing. Okay. Coach, I think
Yep.
time is up.
Okay, buddy.
And if your guest is here, I think we
is.
can start the interview. Okay.
Okay, thanks very much, Steve. And it's 4 p.m. in the afternoon in Athens right now.
Yeah.
So
correct.
it's happy hour somewhere. And it is in Greece right now. All right, buddy. Thank you, Steve. All right, Matt, I'm promoting you. Looking forward to seeing what's on your mind.
I got disappointed there was no promotion joke today.
Oh, yeah, it's getting too old. So let's see. I'm looking for them now. I had them before. All right, let me do this. Participants are up there.
If it's Panama Orange, you
That's
haven't
it.
muted him. Yeah.
I didn't unmute him yet.
No, he is unmuted. Trust me.
Oh, okay. Are you? Okay.
Yeah, can you hear me?
Yeah, we
Hi,
can.
Matt. Okay, buddy. How are you? Welcome back.
Doing okay.
The green share box, if you brought any charts with you today.
Yeah, I will get to that right now. This is my first time using Zoom. Before we always had to go to a meeting.
So you're doing fine.
I am.
So it's a green box.
Yes.
Click it, it'll show the monitor. And then you just click it.
Okay, well.
There we go.
Okay.
Okay.
So this is my sort of latest projection on the market. Even though before you introduced me, you talked about how I'm predominantly bullish on silver, which I am, and I'll explain what that has to do with.
All right, make it large like it was before, just a second ago, because it's pretty small on the screen. But it got larger for a minute. There you go. Okay.
Cool. Yeah, that's great. You have to go through all the pictures you've posted on Twitter, and then you have to go through
Yeah.
your social security number, and then
So you think we're there, and you're calling it a rising wedge. We're at the top of the wedge right now. You think we're pretty close to stopping right in here, right, Matt?
Well, let me go back to actually 2 weeks ago, or a week and a half ago. I was DMing you. I was telling you, there's a lot of people in the precious metals community who are really excited about all the new quantitative easing they're doing, which they are doing. There's tons of emergency QE, except QE 2 and 3 were not negative for the dollar, which seems odd. They were supposed to be, but all the money went to the ultra wealthy, and it's still happening with QE4, and that's the public isn't going to panic until they go to their bank and actually see negative rates. I don't mean like negative, but just even slightly negative rates. But before that happens, they're not really going to understand what's going on. So you can't just expect QE4, this new QE, to send the dollar down. I said, look, if we make a run at new all-time highs here, gold and silver they're going to drop pretty sharply. The dollar is going to go straight up, and that's what happened, because even against all this QE, the gold and silver market are, especially silver, because it's much more tied to small retail money. They're pretty tied to what the sentiment is in the markets right now, and especially because we're getting so close to the early election season on a long-term basis.
Okay, so you're viewing precious metals as a contra-cyclical market, negative corollary market to equities.
Even though
at times they move together.
Yeah, historically, you see, when both of them are let's say we have the Dow and the metals market, and they're trading in a choppy sideways range, and there's no big news. In that case, sometimes the correlation is completely absent. There's just no correlation at all. Now, when one of those starts to just shoot up, let's say it was the opposite. Let's say right now the Dow was like 4,000 points lower, and gold and silver were just parabolic. Well, then you'd start to get the reverse of that psychology. Then suddenly people start to notice, but in choppy, quiet times, that correlation, that psychology just goes away. So it's a correlation that appears and disappears, based on context of whichever market is entering some kind of mania. And here's the thing with silver and gold. The 2015 bottom was clearly for bottom. That was a bottom for gold. I think it was the bottom for silver, absolutely, because gold's kind of been dragging, holding silver up, even as the retail market's completely been wiped out. And the corollary, or the best comparison to that is, you remember when stocks bottomed in 2009? Well, by the time you got to early 2013, let's say January 2013, people still didn't believe 2009 was the low. You had, Obama got a second term. You had, one more retail money panic sell off, and yet, people didn't. We're at that state. We're at that same point with metals now, where they did bottom in 2015, but very few people believe it or are paying attention to it, especially, at institutional level. Even the public definitely isn't, because the public is,
Well, I don't know. I mean, now you have guys like Dalio and a lot of people embracing gold that, haven't for some time. So I think it's become a little bit more Main Street.
Yeah, well, it's been overseas buying that's been responsible. If gold was trading based on American sentiment, it would be $800 right now, because sentiment here, you can go talk to any coin shop, nobody is buying gold here, not in America. But on a popular, that doesn't, when you have Russia and China and India and all these other countries, there'll be too many to name here. When buying there is through the roof, and it still is, that kind of outweighs the fact that here's how Americans trade precious metals. The way they trade pretty much everything else. They pile in at tops and they panic out at bottoms and look for someone to blame. And that's what happened with like the big silver bubble around 1980, the silver bubble in 2011. The next silver bubble will be the same way. The public won't even start to get interested till it's about $80. So around $80, they'll get interested. And then between 80 and 130, we'll have another 70-80% crash after that. And they'll blame people who told them to buy at $20, and they'll get mad at them and threaten to sue them. And it's weird.
Do you have a view of what's happening in the Fed funds market and repo market?
Well, I think you had, a major lack of liquidity.
Right.
Mostly overseas, there's a lot of challenges, but even domestically, there's a lot of zombie businesses out there in the retail market. Like, there's a lot of brick and mortar stores. We all know every day there's some new brick and mortar store closing, but there's a lot of real estate holding trusts that hold, the mini malls, the full size malls, the shopping centers, that are just getting killed because you drive even around nice areas like here in the northwest side of Chicago, and even the nicest former shopping centers are like half vacant, 2/3 vacant. And the guys who are owning those property, they're getting liquidity somewhere. I think that's one of the big stressors right now. It's equivalent to what happened in the housing market in 2007, except housing there was all sorts of things that could bring housing back. There's really nothing that can bring retail back. There's not many scenarios where, unless you turn them all into minimum security prisons, which will happen eventually, but we're not, we're not at that stage yet. And that is that the problem, though, with the liquidity crunch and the public knowledge that we're sort of entering QE4 is we're emptying that fire extinguisher before the market is even rolled over. So if the Fed's all in and they're doing more QE, and national debt through the roof, obviously, and the deficit keeps exploding, by the way. I mean, which makes no sense. This is the greatest economy of all time. Why is the deficit going up and up? We're not seeing. Go ahead.
I'm wondering, with the chart that you have up here, what's going to be behind this path roadmap that you have from the top of this wedge? Is it going to be political? Is it going to be that the market loses confidence in the Fed? What's your narrative for the charts that you're showing? Besides that, there'll be rats because sanitation departments won't have any money to collect the garbage.
Well, here's the thing. Tops generally they have to happen on good news historically. Or the good news or quiet news. That's how it has to happen with retail sentiment. Because one of the things that people got wrong for the Obama administration, the stock market, one of the reasons it was so strong was because retail sentiment, I mean, regular small trader, dumb money sentiment, pretty much stayed bearish or neutral the entire time. And institutional sentiment got really bullish, but they kept having that benefit of QE, and that's who gets to take advantage of the QE to buy back shares, buy more stock. Now, the only thing that really causes the worst crashes, obviously, is when you have a big sentiment bubble in dumb money or smaller traders, because they're not as liquid. They don't have access to the Fed discount window. And that's why you saw like Bitcoin go to 20,000 and then drop to 3,000. And the first Bitcoin bubble went to like $1,200 and dropped to like $200. That's an example of a market. And silver, when it went to 50 and then dropped to 13, when you have that dumb money pile in, and we're at that stage right now in terms of public psychology. And the best way you can see that outside the market is, well, not just watching Fox News, but if you look at the alternative news sphere, the amount of fervor around Trump and the religious fervor, not just regular confidence, but a really a level of trust and faith we didn't see under Reagan or certainly not Bush, not the second Bush or the first Bush. And that is really a poisonous, that optimism. That's what causes tops. I don't believe we're going to see a negative story that's going to set this up. A negative story would be a bad thing for bears, because we have to historically, that's how bubbles top. They top on good news. That's especially.
So have we had enough good news? Phase one of a China trade deal, is that good enough? And the Fed put being back in action?
Well,
is that enough?
I believe that it's not just that, it's the president himself tweeting and essentially guaranteeing stocks are going to go higher. I mean, coming out and just saying you should buy stocks are going higher. That's something I'm not aware of any president doing into a bubble ever. And that is really as far as crowding sentiment. And remember,
I'm not even aware of him saying that. He said that? I know he talks about the market doing great, etc. I don't remember him putting out a buy signal.
Yeah, he's said many times in his tweets, and we're going much higher, and we're going much higher, and look, the market's up again, it's going higher. He said this very, very explicitly many times. And the thing is, that's just crowding sentiment even more. And I don't think he realized, his own stock went to zero in the last financial crash, Trump Entertainment, TRMP. And I don't think he really gets like Kudlow being in the White House right now. They don't really understand that it's the optimism at the top that causes the crash, not some negative thing that just appears. If you look at 1929, the 2000 tech bubble, 2007, you look at now, it's the optimism is what causes the crash. Now in hindsight, they blame manipulation or a certain demographic. I mean, you talk to a lot of people after the 2008 crash, and they'll insist, well, that's because poor people got loans on houses and they shouldn't have got them. And the subprime, and now it's better because they're all renting the houses they used to own. By no means is that better. There's an
better
article
for the hedge funds. Yeah.
Well, there's an article a few days ago about how the top 1% are on the verge of owning more than the bottom 50%. But also there was a graph in there about generational wealth, and it showed boomers, millennials, Gen Xers. And here's the thing, we know millennials are broke, and that's why the car industry is suffering and real estate's suffering and restaurants are suffering. But also in the same graph, Gen Xers have less than half the wealth of boomers. And Gen Xers are in their 40s. If they're not rich now, especially with the market at all-time highs, when are they going to be? Like, we could have all those excuses why millennials aren't rich. It's because of the
student loan debt.
Yeah, that's another thing too, that Trump's really setting him up for a failure in the election. He has no student loan plan, no health plan other than just get rid of Obamacare and we'll start over, wipe the slate clean and go back to before Obamacare. And he really has nothing to attract young voters at all, besides saying, look, the stock market is up, you should go buy stocks. Or it's everyone's rich because the market's up, which again is something he probably thinks. But there's another statistic, I've posted this a few times on Twitter. 84% of the stock market shares are owned by the top 10%. That's who owns 84% of the market. So in terms of volume, and that is you could drive the Dow to 50,000, 100,000, and people are still going to be, most people are still going to be broke. The vast majority will still be broke, and it's not. He's putting all his eggs in one basket on the stock market, and he's going to make it the centerpiece of his campaign and a centerpiece of his.
Do you have a number on your rising wedge that would activate it and be a breakdown that would make it actionable?
Yeah, let me actually pull up one more chart, which is important because I'll show you why is this 1 year wide. This is a 1 year wide wedge, by the way. A lot of people on the markets, when I've seen technical analysis lately, they've been pulling up the daily chart. And the daily chart, if you zoom in, it kind of looks like a bullish ascend. If you go back just to spring, right? It looks like we had like a kind of a bullish ascending triangle when we broke out from it. But if you pull out to a year, basically, then you're talking, because yes, it goes all the way back here to about October, November. That's where it looks like a wedge. And I think a lot of participants in terms of technicals, they're focusing too much on the daily chart and looking at that triangle breakout. Whereas if you pull obviously out to the weekly, it's a wedge. But that's
where would the breakdown be on that, Matt?
Yeah, that's a good. Well, if you look, I'll have to zoom in.
I mean, that's a thick blue line. It could be like a 50 handle line. So it kind of looks like 2,900, 3,000, something like that.
It's not really letting me zoom.
Yeah.
The first time I used Zoom, but let me bring up the kind of an important chart, and that is let's see here, gallery. Oh, where's Twitter? Here we go. Jeez. Okay, here we go. Yeah. Now this is really fascinating.
Enlarge it, please.
Okay. If you go all the way back to 2009, I remember emailing people back in 2009 about this falling wedge. There was this big falling wedge in the SPY, as you can see. Yeah. It doesn't look exactly like the wedge we have now, but it is sort of. It was on the same time frame as a weekly chart.
Okay.
And we had the sort of a complete inversion of sentiment. I would argue that small retail bullish sentiment is more crowded now than bearish sentiment was then. 2009, people had just given up. People were not emptying the ATMs in March 2009. They weren't lining up, panicking. It was just they had just given up at that point. You didn't have the emotional.
They were in shock.
Yeah, you didn't have this bullishness like you had now, where. And again, it's that retail. Institutional money generally does not cause crashes. What causes crashes, again, is when the smaller money piles in. And even in 2007, you didn't really see that smaller money in the markets. You saw it in housing. They were all flipping houses. It still dragged the markets down with them because real estate is such a correlated asset to stocks. And that always aggravates me too when people say, well, buy hard assets, buy real estate, buy gold, buy silver. Wait a minute. Real estate, first of all, highly correlated to the stock market. You get a 40, 60% stock market drop, you're out of your mind if you think real estate is going to stay exactly flat or go up. Secondly, obviously there's depreciation and there's taxes on it. You buy gold or silver, put it in a safety deposit box. You're not required yearly to go right out to the IRS. Okay, I have this amount of silver or gold stored. Here's my property tax for the year on that gold or silver. And property taxes in all the good real estate markets are through the damn roof. And that is it's like a reverse dividend. So this idea and that doesn't even include maintenance, insurance, all these other things you have to do when you invest in real estate. So when people just say, well, invest in hard assets, well, cars, wine, housing, all these things are fragile. They depreciate easily. Gold and silver are very, very durable and very easy to maintain. And they don't have that that element of, that tax claim until you go to sell. And even then, if you're selling physical, if you're selling, like, say, American Eagle silver coins or American Eagle gold coins, there technically isn't even a tax reporting requirement. So it's you can kind of see why the Chinese, the Russians, even a lot of wealthy people in the U.S., why why gold and silver are in a different class. They're not just another hard asset in terms of durability, in terms of liability. It's not. It's its own world in that sense. And I
Well,
do
it's
think
liquid too, unlike real estate.
that's another thing. It's very liquid. Yeah, if you have to get out of your house real fast and sell it, my God, in the middle of a panic, you will not be able to sell it to anybody.
Even in good times.
Even in good times, sometimes you get marooned
Takes
on.
time. Yeah.
And the thing is, again, well, why not just short the market directly? Well, here's the problem. I think once we're down about 25, 30%, I think the first 20% down in the market will be slow and choppy because people think the Fed's got their back. Trump's definitely going to win in 2020. So they're not going to panic when we're down 15%, 16%. They're not going to garden variety pullback, ride it out. It's not until we're down like 25, 30%. Then they're going to think, oh God, Warren's going to win, or whoever some Democrat I don't like is going to win. Or then so the move from the first 20% will be slow and choppy, very slow. It might take months. But that move from around 25 to 30% to like down 60%, that will be a lot faster. But then you get this weird intervention factor where the Fed will come in somewhere north of 23% down, 25% down, and they'll do negative rates. And the day that they do negative rates, it doesn't mean stocks are going to go straight up and make new highs. But if you're directly short stocks, you'll lose half your profits like in 2 days. You'll be sitting there shorting stocks. You got the exact top. They do negative rates. Suddenly, you've lost half your profits in the blink of an eye. Whereas gold and silver, obviously, it'll be rocket fuel for them. So gold and silver are they're immune to this surprise ambush from the Fed, which would be
Well, we've had about a $2.70 pullback in silver, trading 1683 right now. What are your buy zones in this pullback?
I think anywhere here in the 16s, I think it's a buy right here.
Okay.
And
Okay.
I said before when we were in the 18s, I said, look, this market has a coin flip chance of breaking higher. If it does, gold and silver are going to get killed. And I really think people, you have to really trust your sources on gold and silver, because there's a lot of people in the silver community that are so into the narrative of manipulation, and every sell-off is manipulation. And it's like, what did you expect silver and gold to do if the market made new highs? Did you seriously expect them to just go up with the market and expect a dollar not to go up and yields not to go up? It's the manipulation narrative is so toxic, and it's really sort of a self-inflicted problem in the silver community, and a lot of it, frankly, I'm not going to name names, but a lot of it is to shield people from the fact that they were bullish on silver at $50, and now ever since they have to tell you every sell-off was manipulation. This was intraday. If silver has a sell-off on a 5-minute candle, that was manipulation, they'll tell you. And it's like, I'm sure there's some institutional shorting. There was, in 2011 that it was on record, but
Well,
that was
everything's manipulation, isn't it?
yeah.
I mean, isn't financial engineering of corporations borrowing money in the corporate bond market and buying back their own shares manipulation? Only they call it buybacks.
It does happen occasionally when some whale or some big institution comes in to push around the market, but when you cry wolf on it, as they do every sell-off, then that's really not helping anybody by crying wolf, because then you won't know when the real manipulation's happening. If you can't tell me every tick down is manipulation and I'll tell you, I kind of, when we started the interview today, I didn't, how I even got into trading. I was on the police during Katrina. I'm not going to give the whole story again because I've given it before, but that experience did sort of affect my trust levels in the institutional elasticity, or its ability to weather problems. I mean, we never had that moment in 2007, 2008. We didn't have the ATM shutdown or, major third world type unrest. But will we have that after the next decline? Yeah, especially because of all the scapegoating. The right's going to blame the left's going to blame the right. We already saw a few months ago Trump wants to declare Antifa a terrorist organization. Whether or not you like Antifa, it's a very decentralized organization. It is extremely going to war with Antifa would be the drug war all over again. It would be the same vague, there is no. It would be a nightmare in terms of just, and they'd love to do it because it's more excuse to spend, military industrial money and uh, law enforcement money and just have an endless stream of that out there. And they're always looking for, if terrorism, if we don't have enough terrorism, they have to create something else or some other target. But we're this country, and Americans have a lot of it is the culture of convenience we've had. It's not just boomers; it's also their kids. And it affects how we trade markets. That sort of drive-through mentality of, when the market's up, get me in. When the market's down, get me out right now. And a lot of this is why we have such horrible surges and crashes in this country. That sort of mentality of that impulsive, uh, panicking at the highs, panicking
Well,
at,
I don't,
panicking at the
man,
highs,
really, I have
panicking
to
at the lows.
push back a little bit on this. It doesn't only happen in this country. You've had, crashes going back to Tulip Mania was in America. Okay, so it's just the nature of markets that you have euphoria, you have despair, and everything in between, in my view. What do I know? I'm just a blind squirrel in the middle of a snow-covered forest looking for a few nuts, but that's my belief. It's not limited to America, that these market phenomena are universal.
Well, the only first world country I'm seeing right now where the leader is basically, by a certain subset of the population, a large subset, where it's being sort of conflated with religion. The Trump prophecies, the QAnon. I, I don't see this happening anywhere in Europe, where you have a leader. You do have populist leaders that are rising up,
Well, you
but
were talking
they're
about
not being.
markets crashes. I'm just talking about that. The markets. I don't care where it is. If you pull up a chart and you look at history, you'll see that all markets go through the same kind of phases. That it's a universal cycle rhythm. That it's not only America. Will you agree with that?
There've been some really
Yeah,
bad stuff in the bubbles over the years.
everywhere,
I agree with that. I
everywhere.
think,
How about Japan in '89?
well, if we had a crash in the currency and the stock market like Japan, we would
Well,
have.
I'm just saying. I'm not saying. I'm just saying that that it's not just how Americans look and trade and invest that these types of things happen.
Right, but I'm saying they're more culturally, I guess, elastic. They could take the impact better, and
Okay.
we don't handle problems as well here.
So I agree that the boomers are an untested generation.
Well,
Up
it's not
until
just it's
2008,
younger.
a lot
Yeah.
of them have been tested since the Great Recession, which wasn't so great for a lot of people.
Well, it's and there's a lot of people, attacking the boomers, but I'm saying the younger generations too. They have that same culture, at least in America. Well, if something goes wrong, I for I'm going to find someone to blame. It's definitely not
So,
myself.
okay, we're getting close to a wrapping here, Matt. So,
Yeah.
buy breaks in silver. You think the $16 level anywhere in there is okay? Are you looking to perhaps short equities, buy bear funds, or is your investment thesis just keep buying breaks in precious metals?
Since the ride down is going to be so bumpy in equities, I think if you're going to short, you have to be a day trader. You can't. The real juicy swing shorts probably not going to come till after like 25% down, and then you're going to be playing chicken with the Fed, who's going to come in and do negative rates. We're down 30% or 40%. You won't know what day it is. So I still think buying metals is the safest way, because you're insured against that sudden attack from the Fed, and it will be sudden when they announce negative rates, just like when they did all those interventions in 2008. So I would lean towards buying silver as a short on the stocks. I mean, you're buying it because you're bearish, and I think
Okay, fair enough. So precious metal bull at Panama Orange, man, is that the best place for people to follow? You do really make some pretty cool charts with your, your pictures, and they're all great macro looks. So, people that look at them are going to have to fine tune it for them to be actionable. But I appreciate you keeping me informed on Twitter, and I'm always glad to retweet your work. Keep it up.
well, I appreciate the promotion of my Twitter stream. I'm also on